President of Tax Consultant Association, Mr. Vipul Choksi, Chairman, Corporate Members Committee, Mr. Deepak Doshi, Chairman, SME Committee of IMC, and Mr. Hasmukh Dedia, Vice Chairman, Corporate Members Committee, and our guest of honor today, Shri D.D. Rathi, Director, Grasim Industries. Sir, right.
Let Mr. Rathi go. राठी जी आइए आप। नो वरी, आप ही का इंतजार है।
टेक्नोलॉजी
इसी की बात कर रहे थे।
The thirst for knowledge has brought all of you on a bright morning today, and we will not delay this program any further. I request Vice President of IMC, Mr. Prabodh Thakkar, he is also the President-elect for the next year, to welcome all the guests present on behalf of IMC.
Thank you, Dinaben. A very good morning and warm welcome to all of you. In my capacity as the Vice President of IMC, Indian Merchant Chamber of Commerce, I extend a very warm welcome to the future CFOs at the training workshop on the making of CFO. I welcome our chief guest for the workshop, Mr. D.D. Rathi, Director, Grasim Industries. He's a veteran, very experienced person, and one of the most seasoned industrialists who has very kindly agreed to grace the event. And thank you very much, sir, for being with us today. I also welcome Mr. Yatin Desai, President, Mr. Vipul Choksi, Chairman, Corporate Members Committee, and Mr. Hasmukh Dedia, Vice Chairman, Corporate Members Committee from Chamber of Tax Consultants, who are the co-organizer in the event. I thank you and also welcome Mrs. Deena Mehta, Chairperson, Capital Market Committee, IMC, and Mr. Deepak Doshi, Chairman, MSMSE Committee IMC. This is a very unique initiative by topic itself, and unique in the sense is that a lot of committees have come together within IMC and also collaborating with external committee. I always believe that we Indians have a great quality as an individual, but when it comes to coming together, collaborating and working together and putting something, a joint program like this, it demands a lot of challenges. I must compliment each one of you for conceptualizing this and, giving a shape to this, a wonderful initiative. So thank you once again, each one of you. I also thank Mr. Ashish Chauhan, CEO and MD, BSE, for offering us sponsorship, and glad to welcome Mr. Ajay Thakur, Head of SME Segment, BSE Limited, for accepting our invitation to be the speaker. BSE has always extended a tremendous support to IMC for various events, and we look forward to maintain the same in future. On today's workshop, based on present and business environment, it is clear that the CFO's role at today's leading companies is evolving. Alongside the traditional mandate to provide financial insight and analysis, CFOs describe a great involvement in supporting and even developing a strategy guiding key business initiatives. CFO must be versatile individuals with a talent to meet continuously challenging set of circumstances. CFOs face ever-ending pressure to cut costs, grow revenue, and ensure control. Economic uncertainties, etc. There is no shortage of challenges and opportunities both for CFOs. This is a noble profession on one hand and a unique on another hand. It's a noble and unique both. The reason I say unique, that CFOs are made to be answerable and accountable for every aspects of the company without their having an ownership on so many activities of the company, be it HR initiative, be it IT initiatives, be it a business plan, bad business plan, execution. These all are impacting the health of the finance of the company. Sometimes CFOs, poor fellows, are the spectators, but they are accountable and answerable to shareholder, all stakeholders, regulators. But they have to work, their mandate is to work in a very difficult environment. However, things are changing now, and from my experience, I see more and more the CFOs are now invited at a planning and conceptual stages, so much so that shareholders and directors and the core management is now seeking an alignment of vision with CFOs. So CFOs have a very big say in time to come, and rightly so. There is also a change in the trend which is supported by the latest new Company Act 2013, which makes CFO appointment to be a mandatory in a core competent. Mr. Sujal Shah brought this to my notice. So that is again a welcome change, and that is a recognition of this skill and the need of the role of the CFO. There is no shortage, there has never been a shortage of opportunities for a good finance brain, good CFOs. So much so that the scope is unlimited. We end up having a CFOs who are also a Prime Minister today. Now, we will not debate how effective he is or he is not, but there is a tremendous, you travel across the world, what you will find is, you will find a brilliant key finance man or CFO or director of finance all over the world, especially in Middle East or in Asia or in African region. You will find none other than Indian faces in all the CFOs. In order to match up with a stiff competition, SME, our committee has, they look forward to focus on a key stakeholder in the company. CFOs are now going to be an integral part of SMEs. I mean, barring powerful MNCs, large corporate, public quoted companies, They are always driven, and CFOs are integral part of the management. But SMEs are also gladly, are learning the values of the CFOs, and that is a great change again. And our SME committee has taken an extra steps and efforts as how do we integrate and bring SME sector and CFOs together. A few words now for IMC. As you will know, IMC is a 106-year-old institution, is one of the first Chamber of Commerce. Proudly so, Mr. Mahatma Gandhi, the father of nation, was the honorary member of Indian Merchant Chamber of Commerce, and the only only association that Mr. Mahatma Gandhi had was with the Chamber of Commerce. And I underline it's a Mahatma Gandhi, so don't confuse with other Gandhis. We also have a great affiliations and association through these chambers, and directly or indirectly we touch base with around 250,000 business establishment across the segments and professionals. We also have around 137 MOUs across the world of various Chamber of Commerce. IMC has always served with an ever-increased zeal the cause of an Indian trade, commerce and industry, especially in the terms of global trade and investment. IMC plays a major advocacy role on a wide range of issues affecting the growth and development of business and a key policy and implementation matter. We lay a lot of emphasis on public education and awareness such as this, and conduct many programs. Theme for the year is a sustainable development, highly emphasized by our President, Mr. Shailesh Vaidya. Hence, most of our events revolve around this theme, including this very workshop, as I said. In all, once again, ladies and gentlemen, I thank you and compliment each one of you to participate for making decision and joining this workshop. I would only, last but the least, I would add it, there will be no shortage of opportunities, as I have said. India has produced the great talent, the best finance brains, the best CFOs, and you will have no difficulties in getting an opportunities. The only shortage I find it from my experience is when you are pursuing any career or any profession, there is no shortage of opportunities. As I said, there are no shortage of opportunities, there are no shortage of good leaders that you will come across, good business plans that you will come across. But the only thing, watch out, what you will face a shortage, or perhaps you will struggle, is mentor. If you find a good mentor in and around you, that would be the great. Now what happens, a mentor is, there is no rocket science, there is no technology how to search best mentor. Sometimes it's a matter of life. It's like finding a right partner, to get a right boss is as difficult. Sometimes it's easy to get a right life partner, but not a good boss. So the mentor is sometimes a matter of chance. So what happens in absence of mentor, a good mentor, which I wish all of you to find one, but an interaction and participating and investing yourself in a program like this is something that has some way of substituting that. And one more thing, I would stress that the one area that CFOs, especially in financial industries and financial services, is most important and absolutely beyond any compromise is a word called integrity. The integrity, intactness of integrity is so important. This is something that we all learn much before schooling, much before pursuing our formal graduations. That is something that is taught in family, and that is in DNA. And it is so important in financial services. So to be loyal, professional versus integral is also a debate. So I wish all of you a great career way ahead. I wish these 2 days are purposeful, meaningful to you. I wish all of you continue to have intact integrity and you find one mentor. Have a nice 2 days. Thank you very much once again, each one of you, they're present here, and my colleagues on the dais, and thank you those who are not here, all those lovely speakers. I mean, I've gone through the speakers. They are one of the who is who of the industry, believe me. There are some who can write. I was just talking to somebody, I won't name it here. He can write a check of 5,000 rupees if some industrialist wants it. You have really commendable job that our committees have done. Thank you very much. Thank you.
I now call upon Mr. Yatin Desai, President of CTC, to deliver his address.
Thank you, Dinabin. Respected Shri D.D. Rathi, the inaugural speaker of the workshop, Shri Pramod Thakkar, Vice President, IMC, Dinabin Mehta, Chairperson, Capital Market Committee, the Deepak Doshi, Chairman, SME Committee of IMC, Mr. Vipul Choksi, Chairman, Corporate Members Committee of GTC, the Paras Savla, Vice President of the CTC, dignitaries of both the organizations, my colleagues and friends. Good morning, and I join Mr. Thakkar in welcoming you to this training workshop, Making of CFO. I am also happy to share with you that this is the first time these two chambers, that is IMC and CTC, has organized a program, and I am sure that this synergy will continue in future as well. Friends, it is not the strongest of the species that survives, nor the most intelligent. It is the one that is the most adaptable to change. Charles Darwin's famous dictum has long applied not only to the natural world, but also to the corporate one. As the financial crisis and economic challenges have reshaped the global business environment, they have spurred profound changes in the organization and in and around the world. In particular, the role of chief financial officers have evolved and expanded as the financial functions has come to the fore. In addition to overseeing the company's financial health, CFOs are increasingly involved in setting operational and commercial strategy, navigating their companies safely through tighter capital markets, more complex regulations, and unstable trading conditions. Mr. Thakkar has already said much about the roles of CFOs, and my colleague on the dais is also going to introduce the role of the CFOs. So I will now introduce the chamber, the CTC, and I have privilege to do that, and I'll introduce you about the activities of the chamber. Established in the year 1926, one of the oldest professional body, the CTC is not-for-profit organization with its mandate to disseminate knowledge in the field of taxation, corporate and allied laws, and accounting and finance. The CTC caters to the need of professionals both in practice as well as in industry. It has a robust membership of more than 3,500 professionals comprising of advocates, chartered accountants, company secretaries, and tax consultants. CTC operates through various committees, each and catering to a specific area. The committees organizes programs on various topics such as direct taxes, indirect taxes, corporate laws, international taxation, allied laws, etc. Knowledge sharing and dissemination is carried out through various conferences, seminars, study circles, study groups, residential refresher courses, and publications. Some of the publications are distributed as complimentary copy in your kit. The Chamber also publishes a monthly journal titled The Chamber's Journal. The journal has unique feature of spatial story, where all possible aspects of the particular subject is covered, and therefore the journal is well appreciated by the readers and it finds permanent place in the libraries across India. CTC also manages 2 libraries at prominent places like Aikar Bhavan and Pratyakshakar Bhavan, which are widely used by the professionals and students. These libraries are more than 4,000 titles and all leading law journals and magazines. The CTC is also active in making representation to Ministry of Finance and Tax departments. In recent years, the CTC has acted as a catalyst and has contributed substantially to the development of better tax laws, administration, and compliances. And above all, the members of the CTC enjoy a unique bond to fellowship and brotherhood, which is evident in all its programs and activities. With this brief introduction, I would now hand over the proceedings to Dinabin. Thank you.
May I take your permission, sir? We will have a... Ji?
To talk briefly about how this program came about. Before that, I would just speak a few words on the IMC Capital Market Committee and the MSME Committee. Deepak Bhai would be talking in course of this program. The Capital Market Committee is a very active committee which looks into various aspects relating to investments, people who manage the investments and the instruments as well as the markets. So having such a broad scope that we have, anything to do which has something to do with finance, it comes into our scope, and that is how the CFO program also came about. The events of the Capital Market Committee include, we just had a program by the Consulate Generals of the leading embassies, where they talked about their views on the Indian markets. Our next program is on distress assets, which is on 28th of this month. All of you are invited. We are going to get the Reserve Bank people and all the industry people who will be talking about how to go about investing in distress assets, because companies as well as HNIs, the kind of record of returns which is there is as high as 30% if you look at the distressed companies' balance sheets. So lot of things are happening in the distress asset fund, more so when banks are having more and more NPAs. So all these assets are going to go into distress assets, and it is really a big business so far as the entire financial markets is concerned. Then on 20th of September, we have a program on integrity in markets, where we would be having the Justice Sri Krishna, as well as we are trying to get SEBI chairman and other leading financial industry heads who will be talking about what is the importance of integrity. That program is in the Bombay Stock Exchange Convention Hall, whereas this distress asset program is in this very hall. So if you go on the website and you check on the program, something or the other is always happening, and where all the people from the financial world they come together. For people who know nothing about the investment market, we have an investor club which holds meeting every first Saturday of the month. Of course, next month we will be having on second Saturday because of Diwali, where your wife, your children, we have young students right from the age of 16 till the age of 70. That is the wide range of people who are participating in this. There are so many women, there are students, there are senior citizens. So it is again a very good program, than an initiative of IMC as well as the National Stock Exchange that we have this program. Now to talk about the today's program, I would say sometime back Yatin Bhai as well as Vipul Bhai, they came to me and Deepak Bhai saying that we want to do something in the space of the CFOs. Because we feel that as chartered accountants, they would be checking the work which is done by the CFOs, and it is lot of scope is there in actually training up the people and understanding the broader canvas that they are supposed to operate on. So when we designed the program, we went on 3 dimensions. If you will see how the program is designed, first we talk about the functions. Means those are the key responsibilities that the CFO has, which talks about mobilization of finance, risk management, corporate restructuring, financial reforms. Then we went on to the constituencies which the CFO is serving. So then we have got investors. So what are the responsibility towards investors? The regulators. So we have legal compliances, the board of directors. So these are another set of persons to which the CFO caters to. So that is the second set. And the third thing was more on a softer skills kind of thing, where we have got, Mr. Pradeep Shah, who has just walked in, on mentoring of a CFO. See, many times, how we conduct ourselves is really very important. Like what we say is communication is not what you speak, but communication is what the person understands. And 80% of our communication is our our gestures and our body language more than the words that we speak, because the eyes catch the body language first and then the words are getting registered in the mind. So all these finer aspects, and there are so many conflicting situations which keep coming, and when we talk of especially SMEs and MSMEs, these are all essentially family owned businesses where personal egos and family dynamics, all these things, they actually come into play. So lot of such handling is required when it comes to management of the SMEs and MSMEs. So we have a talk on that, and of course the cream on the pudding is going to be Shri Sudhir Walia, who is going to talk about how to meet the expectation of your bosses and all the stakeholders. It is a very, very tough call for the CFO, because if you look at most small scale enterprise, the entire profit goes in payment of interest to the bank, most of them. And what is left, if you remove the interest element, then it is a operating profit is there in the company. But otherwise, you just work to serve the banks and pay them the interest. So this capital deficiency, it causes lot of stress in this. You very clearly you can see that the company is not making money because we are paying interest. And how to ramp up the operations, and today the number of options for getting finances are very many, and the intricacies in all structuring of these instruments requires a very, very high level of your competence, knowledge of financial engineering, and understanding how the products are structured, so that your company is not taken for a ride. I have all respect for private equity funds, but I mean they want to get the top dollar for their money. So how to manage, and compliances, I mean increasingly compliances are becoming tougher and tougher. A lot of time goes into compliance, risk management, the amount of risk which sits in the company, which sits on the balance sheet. I mean overnight things just change, and what was good today becomes why have you done it tomorrow. So these kind of situations are really very challenging situations, and that is why we have designed this program. And I hope that end of 2 days all of you will get a lot of benefit, and you are wiser, and you are a changed person. It is always believed that if you read a book, before reading the book and after reading the book, you change. I think even after this program, after listening to the wise wisdom that is going to come from this stage and the various speakers who are there, because even if you see the speakers, most of them are all practitioners. They have actually, walked along this way, they have encountered these situations and they have come out of it. So we have done lot of, inputs have gone into selection of the person, so that, like some places we said, oh, he should be able to make a presentation, just talk point by point. He should not just come and give gyan. So, all these things we have considered when we have designed the program. And of course, we selected Mr. Rathi to set the ball rolling. As a young chartered accountant, I have always, if you see one icon of professionalism that we have seen in our entire career, almost 30 years since becoming a chartered accountant, Mr. Rathi has been at the center of this, very well-known person who has steered the entire, Birla group through the good times, the bad times, through expansions and through expansions outside the country, being pioneers. I think we could not have got a better person than him, because the kind of experience that he has had when he was at the starting of his journey, I think we all are at that point, and he would guide us through. So I now request Vipul Bhai to introduce Mr. Rathi.
President Yatin Desai, Deena Ben, Deepak Bhai, Paras, my colleagues in the council in chamber, and friends, very good morning to all of you. I think brilliant introduction about the subject has been given by Deena Ben. I was just wondering that she could also have been one of the speaker for this training workshop. The depth of knowledge which you have on the subject. A couple of things, which I would like to add about the subject is, one, my thanks to my colleague, Mr. Apurva Shah, who had designed the program, and after taking input from all the colleagues, he gave the final shape to this workshop. As Dinaben said, all the eminent speakers are going to share their personal experience about this program. And last is, this is a workshop format. So the purpose of this workshop format was that you could interact with the speaker and, take the maximum benefit of this program. So I would urge upon all of you that you kindly interact during the session. Then only the purpose of this seminar would be achieved. Now coming to the Corporate Members Committee of the Chamber of Tax Consultants. This committee was formed about 7 years back with a twofold purpose. One was to have programs which would benefit the corporate members, and second is to give platform to the corporate members so that they could, come on a common platform and exchange their views and ideas. That was the purpose. And some of the best thing about this committee is that we have done landmark programs, and we are the first, so to say, to do some of the programs like be it, panel discussion on revised Schedule 6, whether it is lecture meeting on companies bill, where we had Mr. Bharat Vasani of Tata's, we have, program on corporate restructuring, takeover code, or any program. I think we are the first to organize. That is, the peculiar feature of this committee. Plus, we have a journal which is very useful for the members. So those who are not the member of this chamber, I would request kindly become the member. Some of the future programs which we are planning is, one is family-run business, which Dinaben said it's a challenge for many family-run business, to face the challenge and how to overcome those things. So these are the programs which we have planned, and we also planned programs on Companies Act. We will have a series of programs on New Companies Act because it's order of the day for all of us to learn the New Companies Act. Coming to Mr. D.D. Rathi, I think I have a pleasant task of introducing Mr. Rathi. As Dinaben said, he is an icon in the financial sector. He has been associated with Birla Group ever since he started his career. Initially, he was associated with the leading firm of chartered accountants for 2 years. Then he joined Birla Group in 1971, and ever since then, he has been associated with the Birla Group. He is currently Group Executive President at Aditya Birla Management Corporation. He is associated with groups, various businesses like retail, branded garments, financial services, telecom, etc. He is also a director of Grasim Industries, group flagship and a leading conglomerate engaged in cement and viscose staple fiber business of global scale, and of Ultratech Cement, which is one of the cement major of the country. Prior to his move to Aditya Birla Management Corporation, he was a whole-time director and CFO of Grasim Industry for about a decade. He has also served as senior president and chief financial officer of Aditya Birla Nuvo Limited, another Aditya Birla Group conglomerate, for about 9 years. During his professional career spanning over 4 decades, he has handled a variety of functions including financial management, corporate planning and strategy, acquisitions and divestments, business restructuring, investment relation, taxation and other corporate functions. As I said, he is a chartered accountant of great and immense experience, and I think we could not have a better person than Mr. Rathi to inaugurate this seminar and share his expert views on this subject. And before I request Mr. Rathi to start his talk, may I request Mr. Deepak Doshi, the chairman of FSME committee, to present memento to Mr. Rathi as a mark of respect for him.
Ladies and gentlemen, good morning to all of you. Mr. Thakkar, Ms. Mehta, Mr. Doshi, Mr. Thakkar, of course, in absentia because he has to leave because he had some other program to attend. Mr. Doshi, Mr. Desai, Mr. Choksi, Mr. Salwa, the very, very intelligent and learned participants. I join my previous speakers in extending you all a very warm welcome. It gives me indeed a great pleasure to be amongst you all to share some of my thoughts on a subject which has been close to my heart for decades. I thank organizer and each one of the person on dais for choosing me to inaugurate this workshop. So much has been said about me that for a minute I got mistaken and thought I have all those qualities. Please correct yourself, because one of the job I have to do is to manage your expectations. I'll be proud of myself if I at least possess a part of it. But I'll try to do justice to the subject all the same. You know, I'm reminded of a few things before I start my presentation. Number one is I thought being first speaker is good. Sometimes I thought that being, last speaker is good. But really I continue to remain confused that, so much is said today about the subject that I'm reminded of again another incident. I was invited by leading law university to give a talk on corporate governance. Now, mistaken as I realized later on I thought these are the students. And, I checked up with them that what level of, depth of subject I should go into. But when I started the conference, a young girl who was a student of final year introduced the subject of corporate governance along with me. Believe me, I thought she did better job than me. And same is the case here again. The previous speakers have defined the role of CFO so well that I don't know what is remaining for me to be said. But being here, I think I'll chip in a bit of my part and also try to share my experience at the end of the talk. I firmly and strongly believe that this finance function, and read it as CFO, has very critical role to play, irrespective of the size of the organization, ownership structure of the organization, or the nature of business they are in. I many times think that is CFO a rest and residue function where what is not belong to anyone goes and ends up in his lap. And believe me, he does it sincerely, maybe grudgingly, but sincerely that, okay, if the role has come to me, let me discharge this as well. Now, as somebody earlier rightly pointed out, that it is the smaller and mid-sized companies who have much greater need of a financial discipline. And that is where a finance functionary can play a much more critical role. He is a balancer. He strikes a balance between governance, owners' interest, different family members intervening in the business. He has multiple bosses, not like us where you have one boss to reply, that is either board or chairman, or maybe some of us report to CEOs. So I think I would like to put before you that it's not making of a CFO. You make yourself. Only your initial role is defined. Rest all the role in companies, mid-sized companies and SMEs is done by the CFO himself. He can take upon the challenges whichever he likes. I think work has got a tendency. It travels to the person who does it. So it's really up to you how much you want to do. And it's you who will make yourself, not the, mere the talk by some person like me or others. So having said that, I was told that I could speak or I could use PPT. I think PPT is a fashion. So I wouldn't like to be branded as a person completely out of fashion. I would like to be rated as person still in style. So I'll use some kind of PPT. But idea, this is not tailor-made for SME or mid-sized industries or anything. It just throws the points before you that, look, these are some of the many things which you are expected to do. And it will be entirely up to, debate. And of course, there was no structured Q&A, but I'll be happy to take few questions at the end and also share my personal experience to the extent possible. I would like to respond before I go to my presentation to one or 2 points. One was on debts. You see, the debt is the cheapest form of funding which is available if you are paying taxes. But you can't run your businesses on debts. So CFO really has to balance between the debt, the equity capital, mezzanine equity or quasi-equity, that is where his role becomes very important to his work, because as Dinaben rightly pointed out, that a lot of money goes away to the lenders, but then, I think then you earn otherwise on your capital, you leverage it many times, but leveraging is not a science. You can't say I'll have debt equity of 1 to 1.75 and that is great. You are really to evolve and to yourself. Second is he mentioned about equity. Well, I'm expressing a contrary view. Taking private equity, I don't know, how much is the discipline between the organization itself. And it is the CFO who has to induct that kind of discipline. Lot of entrepreneurs who I happen to talk or just interact, they say that equity is the cheapest. They feel that if I pay 10% dividend, take the equity at 5 times of the 4 times premium, then my dividend outflow is 3%, 4%, and I got the equity. I think it's the CFO who will emphasize equity is a risk capital. It is costliest. You owe nothing to someone so long as you don't take money from others. But moment you take outside money, your role, your responsibilities, your governance standard, all have to undergo a change. So I think private equities, maybe they demand more, but they take higher risk. And this is where the CFOs will make a difference. They will bring in the required equity by the entrepreneurs, and at the same time see that the person who takes risk and puts money with you is rewarded well. Now let me move to a bit structured presentation, and the points which I want to cover would be something like this, that how CFO's role has evolved in the business, how the role has changed from time to time, and where does it stand today. There is an emergence of multi-dimensional new generation CEO, but why does it happen? Why there is a paradigm shift in his role? What has changed which makes us, change the role of the CFO? Well, I have, both my assignments, which I think, or rather 3 of my assignments which I want to do are generally in the conglomerates. The role of a CFO in conglomerate who reports directly to the board and chairman is somewhat different than what you would have in a company where you have a CEO and you don't have multiple units located at multiple places. I have few thoughts which I'll throw before you, that what do you look at CFO's qualities? What are the views of leading Indian CFOs about their role and what they have done most, just in the form of a few dialogue? Well, you can't say CFOs always succeed. There are equal number of, not equal, but I'll say there is good number of failures to their account. And I'll just give the instances which you can look at. The CFO by itself is not an end game in the organization. You are CFO. Now, where do you want to move further? I know I'm jumping the gun or I'm just going 2 steps ahead for you, but ultimately, to set your goal right from beginning. I've interacted with number of chartered accountants, number of finance functionaries who start with, and they say my ambition is to become a CFO. And I will tell them that, okay, you will make it. I'm sure you will make it by dint of your hard work, by acquiring of knowledge. But where do you want to go beyond CFO? And that is what also someone has to look from the beginning. I like to present a very simplified version that, how CFO came in being, how this new word, it's really, earlier we used to use different words for the same person, and how a CFO, who was the first CFO? I think, I would say it was the trusted Muninji. Many of you, I don't know, will recall the cycle. He used to sit on the gaddi beside Sethji and would do the disbursement, then take the odd questions from many business associates who will come to see him, and even handle the financial need of his family members. Even the lady of the house would have to come and ask Muninji what to do. I think in my mind, he was the first CFO of the country. That was his role, which I envisaged. Time changed, requirements changed, everybody wants to go. So he became the accountant, handling accounts and tax matters. Tax was most critical. When introduced, the tax rates were different. I don't know how many of young people present here would recall that at one time, the rate of tax in India was more than 100%, particularly for salaried people and those who paid well tax. 97.5% was the tax. If you are a salaried man, your perquisite goes up the moment you get the increment. And of course, you have to use wealth tax. So tax became very important, and all of us know the Indian economy, how it is turning from what you call black money or grey market to the real economy. Then arose the situation where he has to borrow. Earlier, every businessman want to do business through his money. Then he realized that it is better to leverage, so he became the finance manager in time to come. Then became, as the business grew, he became the controller, where he would control multiple functions of the business. And the ultimate thing, for the time being, because there is nothing ultimate, roles will keep changing and evolving. I do not see a fixed, defined role for any function. He started, assisting the audit committee. If I recall correctly, 1993 was the time when India started accessing the global capital, that is through GDRs and private placements and all that. So he would stand before the big audience of investors, not knowing any of them, and committees in discharge of their functions. Some of their members may not be, that expert on finance, and then handling the task for his CFO and the promoter in the boardroom. As his role changed, so changed his titles, from accountant to finance director or chief financial officer. I'm not going to details of all of them. I'm sure you'll perhaps get a copy of this presentation if you are interested. Now, let me move on to traditional role of a CFO was bookkeeper. He would just emphasize on record keeping and give the information to his owner as required. Then, more important, it became to comply with the statutory requirement, present those accounts, comply with the regulatory requirements, and largely because it was owner-managed businesses, accounts were used basically as a reference point, not as a great governance issue or not as a giving information to the stakeholders. Mid-70s and mid-80s saw a lot of additions to CFO's roles, which was bank and financial institutions dealings, there is resource mobilization, corporate taxes and tax planning, which even today is critical. I think if we really look at it, one large item in any large balance sheet of expenditure is the tax payment. The state takes away almost 30%. I mean, if you are, I'm talking of the marginal rate without taking any risk for themselves. You share the profits, you don't share the risk. So I think tax management become important. Companies realize that, look, it's not the profitability which counts so much. What counts for survival is the liquidity. And the cash is king, and it will always remain king in my view. So he started managing the treasury and surplus fund and see that he gets a positive carry, not a negative carry. Business started going, multi-currency. So it became very important for him to manage the currency risk. If you see the balance sheets of the companies, you find where the risk is not managed well, you find a huge debit. And a lot of people don't realize that, look, we are in the business, be it cement, be it fiber, be it textiles or whatever it is, and not in the business of managing currency risk or making money from currency dealings. So that became his task, and of course to maintain the rating. Now, a question arises, why there is a shift? What has changed his role? And I think the basic thing is changing business landscape made him change his role. Look at even small industries or look at medium-sized industries. They extensively realize the importance of a good management system. They realize the importance of decision-making based on data, based on analysis of numbers, and not merely the gut feel that the owner feels that it's good to do this, so let's do this. He also tries to look beyond 1 year, 2 years and all that. The major game changer was global ambitions of the corporates. I remember when I started, I was very happy to see that, look, I manage a cement company which has 2.5 million tons of capacity. I recall once I was told my boss, when we wanted to do restructuring and all that, look, I want the company to go to 35 million. And our size at that time was 4 years. I publicly confess I thought he is exaggerating, which my boss never does. And he made it happen in less than the target which he set for the company, that we were 35 millions much before we thought we will be. So the size became exceedingly important. No longer a belief that, look, I have a 3 million cement plant, is a well-managed plant, cost-effective. No, you can't compete. This despite the fact that cement industry does not have a global competition in real sense of the term. If somebody wants to compete, a global player, he has to come in this country and compete with my home turf. That's like, you're playing a cricket team playing on his ground and then he goes and plays in England in the cold weather. That much is the difference. But all the same, today you can't have small cement industry. So what I say is that size made all the difference. Even today we are far below the international sizes. Look at ourselves and China, a comparison which always we start making. Moment we do something, we say compare India with China. I think it's the wrong comparison. We are far, far behind and we have a long way to walk. But all the same, today, average size of an Indian cement company could be possibly more than 10 million ton. And which at one time was, because of the licensing problem or authorities, was just 500 tons. And China is many times, they would have possibly 6-7 companies which would control the entire cement sector. And their cement sector, I don't know for sure, because all of us claim knowledge about China, but I don't know how many of us really know the China. Their cement size is, if nothing else, 6 times of us, 5 to 6 times of us. Another thing which made, real change was the complexities which came in the business. It's no longer that, look, dollar is regulated by the government, so, it will remain 8 rupees till they change it to, suddenly to the 12 rupees, this, that. Now you face so much impact of global events that, of course, we take it as an excuse as well that we are impacted by global economy. But really, we have multiple dimensions to handle and then change the role of CFO again. Another is widening of investor base. You owe everything when you take somebody else's money. You become a trustee of it. It's not the money that has been given to you is for use by you and never to be returned. Every money which you take from somebody is to be returned in one or other format. And as your investor base goes, so does go your accountability. I remember that after my first GDR, or my first GDR, when I went to do GDR, I was finding it so tough to talk to an investor. I thought it takes I would be